Here we go, guys. Quick video on gold and silver and why we decided to go short when everyone else was piling in long on these two metals. Number one, we had a strong time count here. And number two, we saw resistance back to the left. Most of the times, everything you need to know about the price action for support, resistance, so on and so forth is going to be on the left-hand side of the chart. Previous consolidation, number one. Number two, previous support. And then number three, previous resistance. So as many of those factors you can put together will help your thesis, have better odds, better probability of either, going long to the upside or going short to the downside. And then also right over here, this little consolidation for several days, and then we had a big drop. And we were looking at, the psychological part of that. As soon as price got back up into this range where most people buy at the top after several candles to the upside. Okay, well, that's one hint. Okay, so as soon as they got back up here, what are they going to be doing? Thank goodness, we're back at, a little profit or break even, so we're going to get out. So that helped. And then over here, we had the same thing. Many candles to the upside, just like you don't want to short the bottom after a big run to the downside into support. You don't want to short into support. You don't want to go long into resistance, especially after you've already ran, several days to the upside. Okay. So anyway, that's the trick on gold, and we're expecting price to pull down back into this 20. As you can see, we don't have a whole lot on the chart. Just this trend channel here, we broke it, tried to retest, made a little bit higher high here. So gold is still, strong. Don't get me wrong. We're not going to go back, to, 1,500 bucks anytime soon. Okay. Well, we're starting a little bit of a pullback here. Now the trick, I'll give you another one. And all of this is in the course below. I believe they still have it 50% off trading these futures. But anyway, we're this red candle, if it closes under the green, as simple as that may sound, if it closes, where it is now, or maybe even if it pulls back a little bit, but still closes under that previous green candle, you have a 60% probability of continuation to the downside. Okay, and we're expecting to come down into, if I can get my pen here, into this little consolidation zone right here, where a lot of people are getting whipsawed in and out. By then, maybe the 20 is up into that zone, and then we can get some support. Okay, so that's the location. In the event we want a nice green, bullish engulfing, clearing takeout candle, however you've been taught, what that candle is. And that's another thing as we go over to silver is that if you can't name it, if you can't identify it, why are you getting into it? Okay. A thought, a feeling, a hunch, none of that's going to work out with high probability, high success. Okay. You need to be able to, name what the setup is, identify it, and that gives you, higher odds, higher probability of success. And let's see here, silver kind of worked out the same way. We had this red dashed line across here, and going way back to the left here into September, actually, we had, resistance because it sold off. See, it sold off. We broke through it here. Once we got under it, see, we couldn't get over it here, here. We closed on it yesterday. So real strong resistance here. And then, stop loss at the top of that resistance as we got in. Now we're coming, that same thing, we're coming into the 20. Normally the 20 will hold when an asset is trying to break out. So we're looking at, like up, a little back test into the 20 and then continuation. Now, are we going to get in as soon as it hits the 20? No, we're going to wait for that event. We're going to wait for, a candle, a formation that we can name. We know what it is. We can identify and then scale in at that location. Okay. whether it's at the 20 here or back here. Also, this is real good support through here as well. And that's another thing, people see a big, pullback and then they want to short into it, with the expectation it's going to go lower. But guess what? You are shorting into support over here, and that never works out well. And just right here as well, that was your event candle here, got back up over the 20 after we bounced off of previous support all through here. Okay, and then let's look at the DXY US dollar currency index. As you can see, it too is coming up into a little bit of resistance here from the previous weeks, and into November, into December, and we're on a time count as well. We are over the 20, which is bullish, positive for the dollar, but we need to, stay pretty much where we are today. See that red candle? We don't want to start selling off, or what? Well, what I mean is that, if you're long the dollar, okay, thinking it's going to go up, you don't want to pull back and close under the previous green candle, number one. Number two, under the 20. Okay, if it holds pretty much like it is now, then you could get, again, pretty good odds. You can get a green candle tomorrow that breaks, and the trick is breaking out and over that little pivot right here. See all this? You want to close over it, and then you have an opportunity to go higher and at least retest this high right over there. Okay, so this, because of the time count, number of green candles in a row, you're probably just going to put in what they call a pause candle, little red candle here, and then a green continuation tomorrow. We'll see. And then right here is a moving, measured move here at the green dash line. Our, members of the course know what that is, know how to set it up. It has real good odds, probability of catching support as price is pulling back, or catching resistance, price is pushing up. If you know how to do that, then closer to where the bottom is, the top of a run, so on and so forth. But guys, appreciate you watching, and we will see you on the charts.